Late. Late. Look at your clock, my friend. It says 4:45. I'm not late. I don't like these jokes. This fintech dip is going to be a generational buying opportunity for many companies. I never like using the word generational, or at least not too often, unless it's like really serious. But yeah, this just goes to show you how quick, if you guys are not following what's happening in fintech, how quick people are willing to turn around and buy positions in these companies. Let's just take a quick look. Um, very, very quick look. Okay. And then we'll get into Square. Let's go over the company and all that. But I just a little teensy look. Okay. So really quickly, maybe, oh, actually, it's just going to be in the top corner. So Block is up 19% in after hours currently. Let me see some of the other ones here. So Affirm was up 19.5% at the end of the day. Shopify was another one up 22%. Lemonade, oh sorry, letters backwards. Lemonade up 47% today. It's just been an absolute fintech day. Always late. Jeez. Jeez. How do you push the start time back and still start late? What do you mean start time back? What about my start time changed? It's been 4:45. Okay, ladies and gentlemen, let's talk about some Block. All right? Let's talk Block. Why is Block up 18, 19% in after hours right now? Tell me if you guys like it in the, dark mode. I'm able to hit the dark mode faster than SoFi is, or if you guys like that flashbang white. ETF just blocked me. He stays in chat though, but he's blocked me. Guys, make sure you guys check out the Twitter. You can go ahead and block this account right down here. ETF is already done it, so follow his suit. I'm kidding. Don't do that. Some of you guys are gonna freaking look into that, and that's gonna be ridiculous. Do not. Okay. That looks ridiculous too. Oh my god, did my thing freeze? Oh no. Okay, good. Jesse, he doesn't even try to be on time. I know. It sucks whenever you're on time or you're late by a few seconds directly in at 4:45. It's not enough for you guys. Enough to send $20. Thank you so much, Jesse. Let's talk about the stock. So let's just talk about what everyone's talking about. And they highlighted it in bold. This letter is actually quite interesting. We'll go through parts of this, but I just want to highlight one specific part. I think I've already passed it. There's no way it was this far down. Where is it, boys? There it is. As we progress towards the rule of 40 in the next coming years, we expect our margin profile and free cash flow generation to improve as well, which means we can return more to our shareholders over time. Today, we're instituting an initial authorization to repurchase $1 billion in shares, which will offset a portion of dilution from share-based compensation, which, by the way, can we just talk about it? Still went up. Okay. They're not stopping. Why aren't they doing anything about it? Like, bring your employees in, fire some people. Okay. Bring in other people. Say, hey, we are going to rewrite your contract or get out of here. Like, I don't get it, man. I don't get it. We're going to tighten our belt and then proceed to do nothing. Anyway, $1 billion in share-based or stock-based compensation, not a bad start. It's fine. I'll take it. Okay. This will allow us to act opportunistically when we believe our company is undervalued. When we believe our company is undervalued. So do you think it's undervalued right now? Who knows? There was another interesting part. I mean, you guys need to just go through and read this entire letter. We're not going to have time in the next 11 minutes because there is quite a few things that I wanted to talk about and interesting parts in the company that show some pretty big weakness, in my opinion. And I'd like to point that out to you guys. Small things, but it's important that all products grow, in my opinion. But anyway, my focus going forward is threefold: our Square business, because he recently just took that over. So I think that has a little bit of bias to it. But our ecosystem of ecosystems model, and then our costs. So not specifically talking about Cash App, but mainly talking about Square, because he just took that over. So he's very interested in that right now. And then the ecosystem of ecosystems, what he's talking about is bringing these companies together. Over the past few months, we've reset the relationship between Square and Cash App and restructured Afterpay to ensure a stronger connection between each, and most importantly, create an innovative customer experience. We finally have a line of sight to see more of Square within Cash App and vice versa. We believe combining the two ecosystems enables us to provide customer experiences others can't, specifically for commerce. This is where everyone's going. We just saw this in PayPal as well. This is the exact thing that they're talking about. However, what I find funny about PayPal is like you got 430 million users, 80 of them for which are actually on Venmo. You know, if they are going to do this exact same thing with their double-ended merchant and seller ecosystem, they might be way more at scale. You pay for that as well. I mean, there is definitely a multiple in terms of just what the size of the market cap is, but also so is the amount of profits and revenues, and it's just a much bigger company at PayPal. Still, though, one company's up 19% today, the other's not. So take that how you will. Cash App sits at an intersection of three traditionally distinct use cases: financial services, community-based transactions, peer-to-peer, and commerce. Our approach for Cash App is to uniquely bring these three areas together and define a new product category and reinvent banking for our customers. I will say, they have definitely done that so far. This whole idea of peer-to-peer accounts, I mean, yes, PayPal kind of started this. Cash App revolutionized it for sure. If you look at, there was this chart I saw recently talking about the difference between Venmo and Cash App. I got to start closing some tabs because this thing is acting extremely slow. I don't think we'll be using my block spreadsheets today. I'll have to maybe bring that in, or not today, not during this call. Maybe we'll talk about the things and Shopify. And there's just been a ton of earnings lately. I didn't even get to talk about Mercado Libre or Airbnb or anything. So there's so much we need to cover. Fintech, I believe, is back. I mean, we're not seeing the terrible earnings results that people think we are. We're seeing it a little bit from more of the legacy players. But a lot of companies are putting up very exciting numbers, especially what I will say. It's not like, Cash App is returning to multiples that they once were, or neither with Shopify as well. I think the important thing to say here is how oversold they were. It makes for great buying opportunities now, not necessarily back whenever rates were at 0%. Anyway, let's go back here and but we'll slowly talk about all the things. Affirm, the one that got away. Affirm is, I think, honestly, running more on the news that they keep deepening their relationship with Amazon. And you have to remember that even Shopify, by the way, as Affirm, actually benefits from the Amazon, relationships deepening and all of this stuff. That Shopify also benefits. We hold a lot of stock in that company as well. So I don't care if they don't have massive success. I'm still going to see it. It's my biggest position. But yeah, so I don't think it's the one that got away. I just think they have such a big brother through Shopify and through Amazon that it's pulling their weight. But I still think through organic growth that PayPal is going to win. Just my take. We have clarified a focused strategy on earning the primary banking relationship on our existing customer base in the United States. We'll do this through continued focus on reliability, customer service, and security by enhancing our banking feature set and revisiting our go-to-market efforts, inclusive of bundling Cash App's financial services offerings. Now, what I will say, SoFi is still my bet whenever you're talking about American primary banking relationship winnings, okay? And the problem is right now is the people that they're actually winning this over are not making a lot of money. That's just the truth, okay? So whenever you're actually placing this against something like SoFi that will give you 4.5 or 4.6%, very, very important. But let's actually take a look at the numbers because we have all of 5 minutes and I didn't even realize. I'm treating this like a fintech frenzy. I'm just having a good time with you guys talking about fintechs. But let's jump a little bit into the numbers. Overall gross profit up 21% year over year. 15% of that came, well, not 15% of that, sorry, 15% year over year growth from Square. So it's actually a laggard. It's slowing down that year over year growth, where Cash App's growth is continuing to hold up quite strong, 27%. Not nearly as strong as previous quarters. However, 50, 60, 40, 30. It's going down, but still, Cash App is growing well. In terms of operating income, still down 10 million. Whenever you adjust it, we're actually positive 90 million. Stephen Fiorillo is not going to like whenever I tell him that, though. He does not want to see these adjusted numbers. He wants gap, and I don't have anything to give him on gap. Still, once again, net income negative $29 million. Let me make sure I. Okay, good, good. We're in the call. It's just not actually playing lobby music. Perfectly fine with that. Adjusted EBITDA $477 million, quite a large bump from Q2 and year over year. Very, very exciting. They talked about a couple things that I didn't like here in the Cash App ecosystem. So one of them, for example, well, this is actually one of the good ones. Sorry. Cash App Card reached 22 million actives. That actually led to a 40% attach rate from the 55 million Cash App active users, right? So Cash App actually really has about 80 million people. Whenever you're talking about monthly actives, it's quite high. And then I think they said 30% of them use it or transact with the card on any given day, which is crazy. Um, but Oh, this is cool too. So people don't know Cash App Borrow is actually their lending services, but it's a little bit weird. It's more like payday lending, short-term lending, $200 personal loans, essentially what it is. They originated over $900 million in short-term loans and had more than 2 million Cash App Borrow monthly actives as of September. So 900 million is it's small if you're talking about a lending company, okay, but it's still nothing to scoff at. That was about the total size of the originated volume of SoFi's student loan originations, about 900 million. So um let me see here as well. They said historical loss rates of less than 3% on average. Okay. I wonder if they're saying maintaining a historical loss rate. Okay. I'll have to see how that inflects. See, the problem with Square that I always find, they do not show consistent metrics over time. It's more like continuously changing. Cash App Pay, okay, them getting into the actual commerce side continues to grow. Happy to see it up to $113 million. By the way, just to put this into perspective, SoFi, even with their only, I think it's 6 million or so, actual financial services users, was doing about 200, what was it, 275? Oh, no. Sorry. It was $1.275 billion dollars in transactions through SoFi. So even with their scale, it does pay to have obviously much more affluent people. If you're bringing on tens of thousands of dollars versus hundreds of dollars, it does make a big difference. Square ecosystem, obviously, Jack is honestly, if you go through it, it looks like he's bashing. What was her name? Alyssa Henry, I think it was, or Elisa Henry. And he's like, after taking over Square and reviewing it, there's a bunch of stuff that needs to change. We are going to be revolutionizing this side of the business, and it's been mishandled. So, quite interesting. But yeah, if we miss any of the numbers and anything, the CFO will obviously cover this, and we'll talk more about it on the FinTech Frenzy. Because obviously, I probably should have went live a little bit earlier. I'm a little busy. Okay, so just relax. All right. I got lobby music. Don't worry. We're not going to miss the call. It's 5 o'clock, but I am listening. just music at the current time. Transaction based revenue was 1.66 billion, up 9%. Transaction based gross profit up 9% as well, keeping steady. Processing $60 billion in gross payment volumes, up 10%. Okay. I'll have to take a look at what their take rate is and if that's keeping the same. Um, yeah, we don't really have too much time to go through this, but obviously they are moving up market. They've continued to do that. Very, very interesting. Okay. Yeah, Square's done really well outside of the US. This has been true too. Really showing annually here, though. I want to compare that quarter over quarter. And some people could say it might be cyclical, but I just want to make sure. Cash App inflows kind of slowed down. Yeah, okay. Want to see if maybe we can touch on guidance right here before it starts. 2023 for the last quarter, we're looking at gross profit of 1.98 million or 1.97 million. Year over year growth about 18.5%. Adjusted EBITDA of about $440 million and adjusted operating income of 50 million. Okay. Adjusted operating income for 2024 is expected to be $875 million. Wow. Wow, wow, wow. Still music, by the way, guys, ladies and gentlemen. I'm just taking a look at some of these numbers just to compare. Cash App Pay volumes has experienced rapid growth over the past quarter. As of September, there are more than 2 million Cash App Pay monthly actives, doubling since June. Well, I mean, you guys just put it out. And now that it's available on Stripe and everything, it will grow very fast now that the people see it more and more often. This really excited me whenever they announced Cash App Pay. Whenever you have 80 million users and you have 2 million using it, it's like, I don't know. I would expect a faster, you know, faster use than what they've seen just doubling since June. I mean, that's exciting, but it's also still pretty low. I want to see some like 5xing, like for someone to use Cash App Pay one time. You know what I mean? Make one payment from your existing primary banking relationship. Here, I'm gonna flashbang you guys. Sorry, it's going to white mode. But this is what I guess is so funny and what I love so much about Cash App and what I think is also so funny about them. They talk about these new ways that they're innovating and revolutionizing. And they go, okay, well, we've actually made this new pink card. Okay, it's pink, and to so fire to some people that actually are really into banking, this looks silly as ever. Okay, because it's like you're not doing anything that is leading to any real, financial inclusion or more benefits to the consumer. You just did something that is might look nicer for a certain individual. But this stuff has worked for Cash App in the past, okay, which is so crazy. The ability to have your own art on your card has allowed them to attract so many users and so much inflows into their business at zero APY, right? So their savings account was one of their fastest growing products ever. It was a 0%. I'm really having a bad connection or experience right now um, with StreamYard. Don't know. Don't know. It's been laggy. Been giving me a bad experience. Whatever. We're back. You didn't have to refresh. It was me. I dropped out. The black screen was real. Um, oh, the call is on. I was just getting music. I don't know what's going on.
Million monthly transacting actives, up 11% year over year, with growth driven by our peer-to-peer network. Inflows per transacting active averaged $1,132 in the third quarter, up 8% year over year, and relatively stable compared to the first half of the year. Monetization rate, which excludes gross profit contributions from our buy now, pay later platform, was 1.43%, up 8 basis points year over year, driven primarily by pricing changes over the past year and relatively flat quarter over quarter. Turning to our BNPL platform, which contributed $94 million of gross profit to each of Square and Cash App in the third quarter. GMV from our BNPL platform was $6.7 billion in the third quarter, an increase of 24% year over year. Losses on consumer receivables were 0.84% of GMV, an improvement quarter over quarter and year over year. As Jack noted in his letter, in the fourth quarter, we restructured our commerce efforts, moving our BNPL platform into Cash App, as we believe combining the two ecosystems enables us to provide consumer experiences others can't, especially for commerce. From a financial reporting perspective moving forward, we will no longer split 50% of our BNPL platform into each of Cash App and Square. Instead, to reflect the recent organizational change, we'll include 100% of our BNPL platform in Cash App's results, beginning in the fourth quarter. During the quarter, we experienced an outage to our services across Block, which impacted both Square and Cash App systems. We know the reliability of our systems is crucial for our customers and are working hard to rebuild trust. The outage lasted about 15 hours on certain products, and we estimate it impacted gross profit by less than 1% during the quarter. Our offline capabilities for Square and Cash App enabled our customers to continue to process some transactions during this time. Looking ahead, we are accelerating our efforts to expand offline capabilities to all of our Square products so sellers won't be worried about missing a sale, and are prioritizing building our technical infrastructure with greater redundancy and resilience. Turning now to the fourth quarter of 2023. We are shifting away from monthly trend disclosures in favor of reinstating quarterly and annual gross profit and profit guidance. We expect to continue with this updated approach until we achieve and sustain Rule of 40. We expect to deliver between $1.96 and $1.98 billion in gross profit, or 19% growth at the midpoint. For Square, we expect gross profit growth to improve from the third quarter's 15% growth rate as we lap more favorable comparisons from the prior year, and we get the first full quarter benefit from pricing changes on Square invoices we implemented in the third quarter. For the month of October, we estimate Square GPV was up 9% year over year. Our growth has moderated due to both GPV per seller and lower contributions from new cohorts of sellers. We believe GPV per seller has been impacted by macro trends in discretionary verticals, which continued through October. Although we've achieved positive customer acquisition through the first 3 quarters of the year, gross profit from seller cohorts onboarded over the past 2 years are not contributing as much to growth as anticipated, and we're focused on evolving our go-to-market strategy to improve this. For Cash App, we expect gross profit growth to moderate on a year-over-year basis from the third quarter's 27%, as we lap stronger growth from the prior year. We continue to expect all 3 components of the inflows framework to grow on a year-over-year basis in 2023. From a product perspective, we've seen particular strengths in Cash App Card and Borrow as we drive continued growth in our financial services products, while we've experienced softness in growth from Cash for Business accounts and expect Cash App Business GPV to decline in the fourth quarter. Compared to our prior expectations, growth in the fourth quarter was primarily impacted by expectations for our BNPL platform and to a lesser extent, Cash App Business GPV and Square GPV. Looking at profitability, we expect to deliver $430 to $450 million in adjusted EBITDA and $40 to $60 million in adjusted operating income in the fourth quarter. And we are raising our full year 2023 profit guide. We expect adjusted EBITDA of $1.66 to $1.68 billion and adjusted operating income of $205 to $225 million. These are increases of $170 million and $190 million, respectively, at the midpoint, compared to our prior guide. For the full year 2023, the midpoint of our guidance implies gross profit growth of 24% and adjusted operating income margins of 3%, leading to Rule of 27 this year. This reflects meaningful margin expansion in 2023, with the midpoint of our guide reflecting 5 points of adjusted operating income margin improvement and 6 points of adjusted EBITDA margin improvement compared to 2022. Turning now to our path to achieving Rule of 40 in 2026. As a company, we remain focused on balancing growth and profitability. As we look longer term, we're bringing a renewed focus to efficiency, exercising discipline with our expenses, and thinking critically about how we operate to drive leverage. We're going to do all this while also focusing on how we can continue strong top-line growth to capture more of our addressable market. We introduced our investment framework at the beginning of the year, and today we want to provide more context on when and how we expect to reach our goal. As Jack shared in his shareholder letter, we plan to reach Rule of 40 in 2026 with an at least mid-teens gross profit growth and approximately mid-20% adjusted operating income margin. This guidance is based on current trends in our business and does not factor in changes to the macro environment. As we learn more and trends change, our expected mix of growth and profitability may change over time as well. We will continue to monitor trends as we periodically update this view. We see a long runway for continued growth ahead, and in our long-term planning, we've refined our priorities for each of our Square and Cash App ecosystems, which are captured in Jack's shareholder letter. We believe we are still less than 5% penetrated against our $200 billion total addressable market, one which we will work to expand over time in a disciplined way with new products and audiences. In balance with our growth priorities, what you're hearing from us today is a significant commitment to profitability and efficiency across 3 key initiatives. The first area is through the efficiency of our teams. As Jack outlined in his letter, we are implementing an absolute cap on the number of people we have at our company. We expect to be a smaller team by the end of 2024 compared to where we are today. Our cap of 12,000 people compares to our current size of just over 13,000 people as of the end of the third quarter. We believe constraining team size will enable us to be more effective in how we drive performance in service of our customers and accountability on our business strategies. We expect to reach this cap by the end of 2024 with steps towards this goal throughout the year through a combination of performance management, centralizing teams and functions to reduce duplication, and strict prioritization of our scope aligned with the priorities outlined in Jack's letter. We expect to hold firm at 12,000 people until we feel the growth of the business has meaningfully outpaced the growth of the company. With greater constraints on team size, we expect to drive meaningful leverage in stock-based compensation as a percentage of gross profit in the years to come, starting in 2024. Second, we are also in the midst of a broad-based effort to reduce our spend across corporate overhead areas. We've identified a number of areas where we expect to find savings, such as real estate, process improvements using automation, discretionary spend areas like T&E, and certain vendor relationships across software, data, cloud, consultants, and contractors. Third, within our ecosystems, as we've shared in the past, we've been identifying opportunities to continue improving our cost structure as we optimize unit economics and partnerships by leveraging our scale. Moving to our initial outlook for profitability in 2024, which we expect to be our strongest year of profitability yet. While we are still in the planning process for next year, we expect significant margin expansion as we implement these constraints. We expect to achieve profitability on a GAAP operating income basis in 2024 and to deliver $875 million in adjusted operating income, up approximately 4 times compared to our 2023 guide. we expect to deliver $2.4 billion in adjusted EBITDA, an increase of more than 40% relative to our 2023 guide, and to deliver strong adjusted free cash flow growth next year as well. We plan to share more about our gross profit growth expectations for 2024 during our fourth quarter earnings call in February. Lastly, I wanted to touch on capital allocation and our focus on prioritizing shareholder return. As we progress towards Rule of 40 in the coming years, we expect our margin profile and free cash flow generation to improve, which means we can return more to shareholders over time. Today, we are announcing an initial share repurchase program of $1 billion, which will offset a portion of dilution from share-based compensation and allow us to act opportunistically when we believe our shares are undervalued. We consider share-based compensation in our financial targets as we measure our progress towards Rule of 40, and we want to be responsible in managing the impact of dilution as our company grows. What you hear from us today is an increased commitment to delivering value to our customers and to our shareholders as we execute on the opportunity ahead of us. And with that, I'll turn it back to the operator to start the Q&A portion of the call.
Thank you. As a reminder, everyone, that is star one to ask a question, and that we do ask you to please limit yourself to one question. We'll take our first question from Tien-Tsin Huang with JP Morgan.
Hey, thanks so much. Really appreciate the cost discipline comments here. Jack, question for you. Just with all this cost framework now laid out, do you think there's still room here for innovation and outsized growth that we've come to know from Block for quite some time, especially with all the changes and the focus? Can we see gross profit growth accelerate between now and 2026? We'd love to hear your thoughts. Thanks.
Yeah, I think there's even more room for innovation and invention and growth. To be very frank, I believe we're getting in our own way throughout the company. As I've dug in through both the lens of Square and also our investment framework, I just found a lot of silos, a lot of redundancy, a lot of kind of a lack of desire for teams to work together. So I think a lot of what's been holding us back is cultural, in that we need to reinvest in why we're building an ecosystem model and how powerful that is. And then number two is around just our structure. We had unclear decision-making throughout the company, which led to a lot of slowness, especially on the Square side. So we've been spending the past few weeks just looking at all of that, and looking at all of our intersections with our foundational teams, so our HR and counsel and financial teams, and making sure that we approach that work very lightly so that we can focus a lot more on getting products and features to our sellers and to our Cash App customers much faster. So I believe we're about to enter a phase of reacceleration as we look to really hit our goals in our 40. And I want to maintain that we're looking to really focus on our customer and retaining our customers as well. So that it will always be a checkpoint on all the moves that we make and ultimately how we think about shipping and iterating and experimenting much more.
Tien-Tsin, I'd just add that in many ways, we think constraints can make us stronger, as I think that's what you're hearing from Jack. And this people cap, the absolute number cap on the number of people we have, is meant to address and enable these key decisions around our priorities, around our structures, centralizing teams to reduce redundancies in places, enable faster decision-making with clearer accountability, and help us create higher performing teams across our ecosystems. We'll release the team size cap constraint when we feel it constrains growth of our customers or our business, or when our top line growth outstrips the growth of these teams. We're not there today. Our focus also is on cost areas outside of the personnel costs that don't touch customers, such as with corporate overhead. And we think there's lots of opportunity here to address, to streamline our operations without impacting the customer experience. And then finally, just a word from me on our planning process. We have more to do. So far during our planning process, I think we've been appropriately focused on cost efficiency opportunities, but we have so many opportunities from a growth perspective across our ecosystems as well, some of which from a strategic prioritization perspective, Jack outlines in the letter. So what you see here with 2026 growth, what we've shared so far really is based on our current run rate trends. And of course, we'll periodically update this as we learn more, whether it's from a macro perspective or based on our own execution and ability to accelerate. And relative to that current view of at least mid-teens growth, we'd expect Cash App's growth to be slightly above that and Square's growth slightly below. But our focus is on exploring new growth initiatives, and then we'll incorporate those as appropriate into our outlook over time. We have a history here of unlocking new innovation on products and across new audiences to continue driving outsized growth, and we'll continue that work.
Great. Thanks for the candid reflection. Thanks.
We'll take our next question from Timothy Chiodo with UBS.
Great, thank you. I want to touch on some of the local sales efforts in the move-up market for the Square ecosystem. In the context of the 12,000 headcount cap, do you feel that there is ample room to show meaningful leverage on both product development and G&A, but at the same time, again, leaving that room to really lean into sales and marketing, and specifically in building out some of those local in-market sales teams to help drive seller up market?
Yeah, I do think there's room. I do think there's a lot of areas that we can make more efficient within Square, and I think where we've been lacking on the go-to-market is much more experimentation, and experimentation driven by AI tools as well. We put a focus, as you saw in the letter. It's our number 3 priority is to utilize and grow with AI. For us, that means increasing the probability of positive outcomes for sales, customer service, which is focused a lot on retention and sales within the ecosystem, and also marketing to make all of those efforts much more efficient in terms of reaching sellers where they are. And it allows us, with those efficiencies, to experiment a lot more. So we made a really good move with verticalization of our sales force. We're going to prioritize 2 verticals in particular, food and beverage, and also services such as beauty. They're inherently local. Our strength is in local, and when we have that in-person, strength, whether that be an upmarket seller or a small seller, we can expand our ecosystem through that relationship. So we're going to continue to focus on that strength, and then through all those efficiencies that we create with these new AI tools, that will continue to roll out to our sales staff, to our support staff, into marketing. I do believe we can experiment with new things that we haven't tried yet, such as field sales, and learn from them quickly so we can iterate to really good answers.
Thank you, Jack.
We'll take our next question from Darrin Peller with Wolfe Research.
Hey, thanks, guys. It's great to see the outlook going all the way into the Rule of 40 in 26. But really, for now, we get a lot of questions on the sustainability of your Square, the seller business. Really, just understanding the drivers to the double-digit growth we hope to see. International verticalization, software services, cross-sell. Just give us a sense of what the building blocks are to keep that up to those rates. And then also, just an add-on to that would be to touch on where you see the success. I know, Jack, you alluded to the company's culture working on the ecosystem, but I guess we'd love to hear more about where you see the success on ecosystem potentially kicking in, where you can see the benefit of that. Thanks, guys.
Yeah. So I think first and foremost, this goes back to the prioritization that we laid out. So my first 2 weeks with Square, again, running Square, was focused on what are we working on and why, and doing a significant stack rank so that we, as an organization, we know what's most important, why it's most important, and how it's going to impact. The platform that we're building is critical, not only for enabling new features that have left us out of the conversation for some sellers and upmarket sellers, but also to make sure that we're realizing our ecosystem of ecosystem strategy, and especially around our third-party developers so that they can continue to build where we've left off, and we have more information on what we can partner with and build next as well. So the platform is going to be, I believe, a huge unlock for us, and we're going to be seeing a lot of those unlocks into next year. And then I do believe that the focus on these local efforts, whether that be local merchants, local sales, is going to bear a lot of fruit for us. We have a very compelling product, but we've been hampered a bit in the past around experimenting with more novel approaches to sales that we see in our competitors. We're removing those constraints so that we can learn much faster and invest more deeply into the things that do actually work. I think a lot of what's holding us back from a product side is actually onboarding. We still get a pretty significant chunk of sellers from self-serve, and those are of all sizes, whether that be going to our website or buying hardware from an Amazon channel, for instance. And our onboarding flow is it just takes way too much time, and we're taking time away from our sellers completely. So those will be significant focus areas for us, and something that I think will provide pretty quick results over the next year. AI, I talked about in the last question. The final thing I want to point on that really sets us apart is banking. We have a number of products for sellers within banking out there, and we see banking today as more retaining our customers, and when someone comes into the Square ecosystem, signing up for a loan or a card, a debit card or a credit card or savings account helps keep them. In the future, we do believe that this will become more and more an acquisition channel for us as well. And I think it's one of our strongest differentiators, and one I think we'll look back at as being the most proud of. And we have some pretty unique advantages in how we approach people banking with Square, and how we enable sellers, and how that ultimately positively reinforces our ecosystem and also the Cash App ecosystem. So in terms of bringing these ecosystems together, I think the place to look at is going to be commerce. And the most notable within commerce is how we really bring in local commerce, especially within a Cash App view. That is our superpower, and I think the world is going to want more local experiences. A lot of retail is becoming more and more monotone on the internet, and people are looking for more unique experiences, and that's where we fit in, and that's where our strength is, and those connections will be coming to bear more and more, especially early next year. So you will be able to see something early next year. And there's an obvious intersection between Cash for Business and also Square, and you can see that potentially as a graduation path, for instance. But people may want to start simpler and smaller on and utilize cash, and then as they grow, Square is there to grow with them.
Great. All right, very helpful. Thanks, Jack.
We'll take our next question from Ramsey El-Assal with Barclays.
Hi, thanks for taking my question. And this question dovetails a little bit with a couple of the prior ones, but I wanted to ask about Square Go and the progress you're sort of making connecting consumers to merchants on the platform. If you can kind of talk about the progress you're making on this theme more broadly, and what other ways you're exploring to create that sort of consumer demand within the app and ecosystem.
Yeah, it's great you brought up this question, because this is exactly how we're thinking about crossing the two ecosystems between Cash App and Square. So for those of you who are not aware, Square Go is right now focused on services. It's focused a lot on beauty. It allows you to download an app called Square Go, open it up in your local city, and this is mainly in the US right now, and see all the services around you and book an appointment. And then get all the information that would be critical for your deployment in real time. So we're seeing it as a way to provide discovery. Because we've had to start it organically and market it as such and get people to download it, we have actually seen a very strong start, surprisingly, which points to the intent and the desire. Now, if you imagine what that might look like in a much larger canvas with a much larger audience, such as Cash App, those are the questions that we want to explore more, and that's where we think our strength really lies, is when we look across these ecosystems for the use case specifically that Go is going after, which is discovery and discovery of merchants around you and building up a resilient and retentive relationship for a seller and their customer. We think we can amplify that, especially with everything that we've learned with Square Go being in the market thus far.
Great, thank you.
We'll take our next question from Harshita Rawat with Bernstein.
Good afternoon. Jack, I want to ask about Square leadership. You recently took over the leadership of that business after Alyssa's departure. How are you thinking about that going forward? Are you looking for a replacement for Alyssa, or should we expect you to continue to lead that business? Thank you.
Thank you for the question. I'm going to lead Square until we hit some milestones. I want to see a significant return to growth. Number one, I want to see us be a lot more innovative and inventive, and I want to see us connect our ecosystems better, not just with Cash, but also with Title and TBD. TBD is going to enable us to go more global faster, both Square and Cash App. And with Title, we do believe that there's parallels between what a musician faces and what a small seller just starting out faces. And a lot of the same tools are going to be useful. So I'm thinking about this more from a milestone perspective, and I'll know when it's time and when Square is set up in a way that we look to find a dedicated lead. But this move has enabled me to see a lot of some of the problems, not just within Square, but across the company, and work to fix them very, very quickly. So our pace of addressing some of the issues that we've had for quite some time, but maybe ignored, the lack of collaboration between ecosystems, the silos that we built in the past, all those are a thing of the past. And we're immediately moving to something that is much stronger and is going to deliver a whole lot more value for our customers, and everything else will follow from that.
Great, thank you.
We'll take our next question from Trevor Williams with Jefferies.
Great, thanks a lot. I wanted to ask on the path forward for Cash App gross profit and the monetization rate. Specifically, I think within the guidance for Q4, if we back out Afterpay, it looks like it's embedding a pretty big step up just in the pace of quarter-over-quarter gross profit dollar growth for Cash App. Amrita, if you could unpack where that improvement's coming from, and then on the monetization rate, how we should think about its progression over the next year or so, and if there's anything you're able to share on product pipeline specifically there, would be great. Thanks a lot.
Sure, thanks for the question. On monetization rate, what we've said in the past, which we've reiterated today as well, is that we are now lapping some of the pricing adjustments that we made last year. So we expect to see greater stability in the monetization rate in Q4 relative to Q3. And as we said, from a Q4 guide perspective, we also expect to see a moderation in Cash App's growth rate in the fourth quarter relative to the third quarter, as we're lapping, again, some of those more difficult comparisons from last year. This is on the back, though, of strong results in the third quarter with, if you look across our inflows framework, strong growth across each of the three aspects of Cash App's inflows, whether it's active, which grew 11% year over year to 55 million on the back of continued viral growth in our peer-to-peer network mechanisms, or it's inflows per active, which were $1,132 in the quarter, and we're up 8% year over year, relatively stable with the first half of the year. Again, this one is really a factor of both our customers' spending power as well as their adoption of our products and engagement with our platform. And you see with products like Cash App Card and Cash App Borrow that we've been able to build awareness and deepen engagement, with those products over time, with now 22 million customers on Cash App Card, and strong spend on a year-over-year basis with Cash App Card as well. And then thirdly, monetization rate, as you note, which was 1.43% in the third quarter, and that was up 8 basis points year over year, relatively stable from a quarter-over-quarter standpoint, which, as you noted, that monetization rate excludes the gross profit from our BNPL platform. We do expect, as I noted earlier, that monetization rate to, stabilize as we lap the pricing changes over the past year.
Got it. Thank you.
We'll take our next question from Alex Markgraff with KBCM.
Hey, thanks for taking my question and all the kind of financial targets provided in the shareholder letter. Outside of the more explicit Rule of 40 targets, just curious, how we should evaluate some of the progress you're making on the product side of things and kind of tying the ecosystems together as you've laid out priorities in the letter. Is there a North Star or two to kind of orient folks around to kind of follow along with that progress?
I think the biggest one to look at is going to be commerce, and it's going to be through the lens of Cash App. We spent the past few months looking deeply at the Afterpay integration, restructuring that team, moving things to Cash App, because a lot of the value is going to be created there, especially as we bring commerce opportunities, both internet-based and e-commerce based, to local, right to the surface. So that's probably going to be the most notable in terms of connecting these ecosystems. And as I mentioned before, the second one will be the intersection between Cash App for Business and the Square ecosystem. There's some obvious connection points there, especially as Cash App for Business customers grow and how they utilize our tools. And I think a big theme between both ecosystems is going to be around banking use cases, both on the Square side and the Cash App side, actually throughout our entire ecosystem and all our business units. But those would be the three that I'd point to watch.
Thanks.
We'll take our next question from Brian Keane with Deutsche Bank.
Hi, good afternoon. Thanks for taking the question. I guess, Jack, my question is just when you assess the seller volumes, how much do you feel like it's pure economic volume, that discretionary spend that's slowing some of the volume versus maybe competitive pressures from the market that you guys can do a better job at? And then I guess going forward, as the comps get easier, do you factor in a little bit more of an economic slowdown in the fourth quarter if that's in the guidance? Thank you.
I'll take the first part of the question. I do believe that by focusing more on the product, our features, and also getting to parity on particular verticals, especially within food and beverage and services, will unlock a lot more growth. There's been certain features that have just blocked us out of conversations from restaurants, for instance. And a lot of those will be unlocked soon with our focus on the platform. And I do believe that we can be much smarter and more efficient with our go-to-market. Most importantly, as we've made this move to verticalization, looking for more opportunities to automate through AI, but also to experiment more. I want to make sure that we're experimenting with things that we had not tried before, smaller scale, so we can see what works and then make better informed decisions about investing more fully in them. I think there's a lot of room there. And that, of course, has to match what we're doing when a seller, no matter the size, gets to our website, gets to our dashboard, and they find something simple, intuitive, and they most importantly find all of the other products that we offer them, not just the one they came on board for. So the combination of that, I think, gets us back to a place of growth that we'll be very proud of.
And Brian, I can help fill in just some of the numbers that we're seeing in real time and kind of what's embedded in our Q4 guide. So if we look at Square GPV in the third quarter, we grew 11% year over year. And again, based on our estimates, we believe excluding the impact from the outage, growth would have been more in line with the second quarter's growth rate of 12%. Looking at October, we estimate GPV to grow 9% year over year. This is obviously a bit slower than our 11% from the third quarter. It's primarily driven from the US as international markets have been more stable. But looking at some of the drivers, if we think about the three high-level components of Square's growth, customer acquisition, churn, and same-store growth, we've seen stability in churn through this period, but ultimately our growth is moderated due to both same-store growth and lower contribution from new cohorts of customers. Now, we think same-store growth, the slowdown there, is relatively in line with broader macro trends across discretionary verticals. And that, as Jack has noted, we have work to do to shift our customer acquisition trends, which the team is laser focused on. Just to provide maybe a little bit more granularity on the same-store growth. When you look at GPV per seller, this is where we believe the recent moderation we've seen has been macro-related. Processing volumes at existing sellers were lower in the third quarter compared to the prior year. We believe it's macro-driven as the recent results have tracked directionally with other third-party spend indicators that we measure when we adjust for our mix of verticals, given our greater mix of discretionary spend. For instance, we don't serve grocery or gas, as an example. And in October, we saw broad-based softness in consumer spending trends in those discretionary verticals, food and drink and retail. So we're watchful here, and these trends are factored into our Q4 guide. Ultimately, a lot of the work that we're doing to close feature gaps and iterate and experiment and move quickly on our go-to-market is where we expect to see opportunities for growth in the future.
Great. Thanks for the color.
We'll take our next question from James Faucette with Morgan Stanley.
Thank you so much. Wanted to follow up on kind of Cash App and the intention to grow there and provide more of banking type services per the letter, et cetera. How do you think about like the life cycle of a typical customer that you're onboarding, and then clearly you're able to deliver peer-to-peer, and that seems like the easiest first thing, but then bank card or debit card, and you've got some other products, but can you walk us through like how you think about the evolution of other products that those customers need and how to evolve with them, and as particularly as they increase their own spending capacity?
Yeah. So as I said in the letter, Cash App is interesting in that it sits at this intersection of three very distinct use cases, which are financial services, community-based transactions, which is effectively peer-to-peer, as you mentioned, and commerce. And our approach is ultimately to bring these three together in a very seamless way, define an entirely new product category, which reinvents banking for our customers. So a lot of what we started obviously was peer-to-peer, and it has inherent network effects in that you're receiving money from friends and sending money to families. So it is inherently social and inherently has this incredible word of mouth factor. But as you get into it, as you receive money and you see that you can also get a card, that you can use that card at an ATM, that you can invest in Bitcoin or stocks, you start seeing it more and more as a bigger part of your financial spend, in your financial activity and financial life. And our goal now, as we mentioned, is to win more of a banking use case relationship with our existing customers. And what that means is ultimately getting to direct deposit and winning a majority of their direct deposit, because that really indicates that they're seeing this as a financial home for them, and they're able to use it in entirely new ways that they wouldn't be able to in the past. So everything that we've built, again, goes back to this concept of an ecosystem where these tools positively reinforce one another, either through new use cases or through retention, or through entirely new features that they can't find elsewhere. And that helps not only drive new customers, but also helps us keep them. But I think as I said before, earlier in this call, I think the one that we're really excited about, because it is fundamentally new to us, is around commerce. And as we really deliver against these three financial services, community-based peer-to-peer transactions, and commerce, we have something that I believe is very, very powerful and very unique in the world, and continues to build on our strength and lends itself to add strength to our other ecosystems, most notably Square.
And I just add, James, that as we see customers taking on more products within our ecosystem, within Cash App, we see a multiplier effect on the amount of inflows that they bring into Cash App, whether they start as peer-to-peer and then they take on a Cash App card. Maybe they participate on our free stock investing program or Bitcoin investing, and then eventually getting them to direct deposit their paycheck, which is a significant opportunity from a primary banking relationship standpoint. And that's been a big driver of the growth that we've seen in inflows per transacting active over time, as we bring customers greater awareness around the broader set of financial services and commerce products across the ecosystem. What we saw in the third quarter was continue to drive growth in these newer inflow channels. Customers received more than $8 billion in direct deposits into their Cash App accounts in the third quarter, and more than $2 billion of paper money deposits in the third quarter. Both grew approximately 40% year over year, which is nearly 2 times as fast as the growth of overall inflows into Cash App. So obviously more opportunity for us to do here, as we see the direct deposit attached still in that sort of 10% range to Cash App card monthly actives through September, although we've obviously continued to grow our Cash App card attached through this period of time. We think we have an opportunity to improve both attach rates to Cash App card as well as direct deposit in this broadening ecosystem of financial services products for Cash App.
Thanks a lot. Appreciate it.
We'll take our next question from Dan Dolev with Mizuho.
Hey guys, thanks for taking my question. Maybe more for Jack. I think at the Analyst Day, and obviously you're very prominent talking about Bitcoin. Bitcoin is now having a renaissance. What is kind of the role of Bitcoin right now in terms of your vision of connecting the ecosystem, the Holy Grail, and specifically the Cash App? I'm really interested in hearing your views on that. Thank you.
The reason we have a focus on Bitcoin is because we believe the internet will have a native currency. We believe the internet needs a native currency to enable micropayments globally. And we started very simply by providing an exchange for people to buy and sell Bitcoin. But ultimately, over time, we do believe there's a significant market and significant opportunity in remittance using Bitcoin. And that's exactly what TBD is focused on. Not only is it a really incredible business that's quite large, but it enables our other ecosystems, Square and Cash App, to move much faster globally as we build out that functionality and as we build out the primitives we're working on for developers. So I do, I believe that Bitcoin will continue to increase in value, not just in monetary value, but in use case value to the world. And I do believe that it will be a big part of the future of commerce. And since we have such an early lead and understanding on it, we'll be set up for success. We always knew that this was going to be a long-term play, and it still will be. But there's no doubt that the internet will have a native currency, and there's no doubt right now that Bitcoin is the best candidate for that.
And I'll just add, Dan, that I'll just add that obviously you've heard from us today an increasing focus on not only our aspirations and growth for the business, but also discipline in how we operate our business. And similarly, we'll be disciplined around our Bitcoin initiatives, holding our emerging initiatives to a specific investment envelope, and we'll track progress relative to those key milestones on a recurring basis.
Great, really good results, and I love the long-term vision. Thank you.
We'll take our next question from Jason Kupferberg with Bank of America.
Thanks, guys. I wanted to come back to the vertical point of sale in Square. You had the gross profit up 29% there. Is that growth rate sustainable over the next few quarters? And I'm curious what percent of Square's total gross profit is now coming from vertical point of sale. And then separately, if you could just make a quick comment on what you're expecting for stock-based comp expense, both this year and next year. Thank you.
Hey, Jason, I can start. So in the third quarter, yes, we had a strong growth in our vertical point of sale and developer solutions, where gross profit from our vertical point of sale products across retail, restaurants, and appointments was up 29% year over year, and gross profit growth from our developer tools also outpaced overall Square gross profit growth. As we said last quarter, each of our vertical point of sale products delivered gross profit of over $100 million on an annualized basis during the third quarter as well. And there'll be key pieces of how we optimize our go-to-market strategy, improving onboarding flows and experimenting with new channels. I won't give you a specific number for vertical point of sale going forward, but we did note that we expect Square gross profit growth from a Q4 perspective to improve relative to Q3, partly because of the more favorable comparisons, as well as the full quarter of a pricing movement that we took on Square invoices during the third quarter. And your second question was related to stock-based compensation?
Right, for 2023 and 2024, just in the context of the AOI targets.
Sure. So stock-based compensation in the fourth quarter, we expect to be relatively flat relative on an absolute dollar basis relative to the third quarter. And as I said on the call earlier, we expect to drive meaningful leverage on SBC over time, starting in 2024. And here we'd measure it as stock-based compensation as a percentage of gross profit. As we implement the absolute number cap on the number of people that we have at the company, and look to drive operational leverage and efficiencies across our business. This is a key focus area for us. Obviously, SBC is an important tool for us in how employees are shareholders and align our incentives as owners of the business, but it's one that we're very mindful of and have deliberately included in our financial targets in adjusted operating income to be measuring and watchful of the amount of dilution. That's also part of the reason that we've got our $1 billion buyback that we've announced today is an intention to offset a portion of dilution moving forward.
Thanks, Amrita.
We'll take our next question from Pete Christensen with Citi.
Good evening. Thanks for the question. Jack, I wanted to dig a little bit into the go-to-market on the Square side, connecting a few dots from earlier questions, conversations. Sounds like Square may be more interested in participating with the ISO channel to distribute Square products. Is that something on the roadmap? Is that something where you've experimented before? Do you believe that Square needs to embrace the ISO channel more to scale against competitors? Thank you.
We've experimented with it before from a financial partnership perspective. Specifically, we had a partnership with JP Morgan Chase and gave out Square readers at all of their branches as a distribution point. Not closed off to it. I think the most important thing is we need to experiment more, and we need to experiment with different models. I think the answer is not going to be generalized. It's going to be specific to the vertical. This looks different in terms of distribution for a restaurant than it does for services and beauty, and then that's completely different from retail. So I think the most important point to take away is we want to be open to a lot more experimentation that's on a smaller scale for a bit of time, so that we can see what's working and then invest in a much heavier way. We are, looking more deeply at just some immediate experiments such as contracts, which we're seeing some early success from, some local campaigns, more partnerships, and specifically referrals, which we think there's a lot to it, and it kind of harkens back to our earliest day in terms of how Square spread, which was entirely by word of mouth. Referrals helps push that even more, and then just making sure that we're focused on the experience that sellers have when they get in to the service or when they go to our website. So those, I think, are the biggest drivers.
Thank you. That's helpful. A lot of good steps here. Thank you.
Thank you.
And we'll take one more question, and we'll take that question from Andrew Jeffrey with Truist Securities.
Thanks. Appreciate you sneaking me in here at the end. Amrita, the Cash App monetization framework has always been really helpful. Could you unpack a little bit sources of monetization within Cash App? I'm thinking specifically about instant deposit versus interchange and how that's changed over time, and how you think about the instant deposit product in particular in a real-time payments world.
Sure. Thanks for the question, Andrew. We've had a growing set of products across Cash App, and some of which are free and some of which are monetized, and have grown the pace of monetization of some of the products outside of instant deposit even faster than instant deposit. So the mix of the business relying on instant deposit has declined over time, despite the fact that that continues to be a growing product for us and has unique use cases around customer utility. Of course, our focus is as much as possible delivering value within our ecosystem across a number of products. And that's where you've seen the strong growth of things like Cash App Card, with 22 million, 40% attached to our 55 million monthly active base, and where we've seen strong growth from per active spend perspective, which continues into the third quarter with growth on a year-over-year basis there. And along with greater utility around obviously peer-to-peer within the broader ecosystem of Cash App, the ability to deposit paper money deposits, the ability to receive your direct deposit, the ability to extract money through an ATM, the ability to invest money, the ability now to save money within Cash App. And all of these provide a greater utility for a lot of these inflows that are staying within the Cash App ecosystem or moving throughout the Cash App ecosystem. Now, what we've seen historically when we look outside at other countries where instant rails are available, for instance, in the UK, where Square also has an instant transfer product, is the attach rate in those areas for that product continue to be strong and generally about as strong as what we see in the US, meaning that people are willing to pay for seamless integrated product experiences that provide them with value. So obviously this is one that we'll continue to watch, but we've been pleased with the continued growth of instant deposit, but even more pleased with the growth of the other products across Cash App.
Appreciate that. Thank you.
Thank you. And that does conclude Block's third quarter earnings call.
All right, ladies and gentlemen, that was actually pretty interesting because I think as a fintech fanatic as myself, or at least turning out to be one, knowing that instant deposits, it must be true though, right? If you think about it, I think they charge 1.75% to do instant deposit instead of having to wait those days. Essentially what is happening in that transaction is Cash App is sending you money directly and they're lending out to you while that settlement is actually happening. It's practically a small payday loan. And in that way that you pay 1.75%, which is ridiculous that you would pay that if, for example, you're in a geography where there is already a real-time payment system set up. Just think about that for a second, though. Think about the user that actually uses Cash App that doesn't even have APYs on their products to begin with. And they could be earning 4.6% at SoFi, but instead they make 0% through savings accounts at Cash App. It's like Clearly, these people don't care. Okay, so why would it be any different for 1.75%? So I guess that makes sense. I mean, over time, where does the majority of people trend to? I would assume it's to the more customer facing side. But if the product is so much better, then obviously you are going to win clients over if it has just a sheer reliability to it, and the product actually just simply works. One thing I will say, because I do want to give you guys a little bit here today while we're in this, and then I'm obviously going to deliver more of my concrete thoughts at 8:30. That's the FinTech Frenzy. If you guys want to see that, we go live every single day. Hit the subscribe button. Okay, that's all I ask of you. But that being said, I think Jack, although he sounds like friggin', well, we're learning and we're continue to grow. No, I do honestly think that that's him all the time. He sounds really reinvigorated, and I think that the problem with thanks, buddy. The problem with Jack Dorsey, I think, is his ability to actually grow and manage a company that he can fully oversee has been super successful. He might be one of the best leaders of a very small business that we've ever seen. Okay, like, and I mean on earth. He's unbelievable as a product manager and growing a small team. I think the problems that happened at Twitter and the problems that happened at Square, Cash App, Tidal, and TBD, okay, which is essentially just a combination of a bunch of tiny projects that he's working on, is eventually they get way too big, and then he has to try to manage a management team, and he's no good at that. So like what's happening with Square is I think he needs to see within himself that he needs to continue to go back to these companies and like take over leadership again. Do a nice stint at each one of these companies and clean up what the heck they actually turned around and messed up. So I think Square, honestly, we're going to see a large pickup in the amount of experiments and cost savings and all of these things that he actually is good at. Okay. The problem is, as well, he's there. Cash App will falter, TBD will falter, Tidal will falter. So I think another part that they're trying to do and they're realizing has been really crappy is this ecosystem of ecosystems, right? Vertical integration is insanely powerful, and companies spend a lot of money to do, mergers and acquisitions to try to put two different companies that have, beneficial aspects to them together. They spend a ton of money. Okay. Jack Dorsey has built this organically. They have Cash App. They have a Square. They didn't build Tidal, organically. They did acquire that, and they did acquire Afterpay as well. But they need more integration. That's what they're talking about now. Is like, we have such an opportunity if we just get people talking. Why is Cash App Business and Square sellers not one team? You know what I mean? That should be one team of people that go, hey, we're feature heavy over here at Square, and we're really, culturally strong here over at Cash App Business. We need both collaboration. We need costs come down. I do actually believe them. Honestly, I do think this was a very reinvigorating call, although as boring as it was, in the idea that they are trying to, they're realizing and seeing the problems now. And this is kind of why recessions and hard times like what we have today, and whether you want to call it an actual recession or not, I mean, that's not what I'm trying to say. But these cost saving times is it gets people like Jack Dorsey to reflect on all of the bloat that the company has created over the last 10 years. So yeah, that's just really important. I think for the business is they've gotten to such a high level of scale now at this point, and they really haven't gone back and said, okay, where do we have duplication? Where can we add automation? It's practically sound like the exact same call at PayPal, right? There is tons of growth left in fintech. There's tons of growth left in payments and in banking, which is what they also want to bring to Square sellers and Cash App business sellers as well. Reminds me of Shopify too. It's another reason why it's the biggest, position in my portfolio. Is there is so much opportunity for Shopify to go into banking as well. I think that there is people like Jack Dorsey and people like Toby Lucky of Shopify. have been so unbelievably product focused, and it's what's allowed them to even make themselves a market to begin with. Okay. What's important for both of those players, and I think that Shopify has been much better at this, though, however, is bloat. And the second that you give up your reins and hand over responsibility to someone else, it doesn't mean that you don't actually go through the books still and make sure that they're doing their job. This sounded like they, Alyssa, I forget what her name is, that she was definitely fired. That's what it sounds like. There was a couple of comments in the chat that I wanted to cover. Jack Dorsey is a woke shill. Yeah, I mean, I think that he's definitely left leaning, and probably very much left leaning. But that doesn't mean that he's not a capitalist and wants to make a very profitable business. And there's a lot of shareholder gain to be had. But I know Heinzie Ketchupy is quite a political guy, so I find him just looking at the stock here, my friend. Just looking at the stock, and I think there's lots of gains to be had. And I think that you know, he's allowed to get all these different projects out of the way, and like you even hear it whenever he goes, "Oh, we're just lacking experimentation." That's all he wants. Like, but let Jack be in his element. Like that's what he's good at. He's finding he's able to solve problems that no one's really even considered a problem before. That's what made Jack Dorsey who he is. That's how Twitter was created. That's how Cash App was created. Like, you think peer-to-peer networks were popular before, but they weren't as easy and frictionless before he actually came along. It was actually, I think it was called Square Cash whenever he designed it. It was just a side shoot project out of Square Seller, which, by the way, it was a 3.5 millimeter jack card swiping hardware technology. Like, the dude builds revolutionary products. Okay, let's not undercut how great this man has been for innovation. He's 46 years old, okay? He's got another 15 years to go of working on code and AI. I would not bet against this dude. He's had a problem with bloat, 100%. He's killed Twitter. I don't believe in him whenever the companies get to scale, okay? But now it's seeming like, I honestly think Twitter was a wake-up call for him, where he went, "Oh, crap, I ran that into the ground." You know what I mean? So I think now they're like, "Oh, we do need to tighten the belt." And just because he sounds like this does not mean that he's not excited to reinvigorate the company. All right. What's all the comments saying? John, you had something before. Oh, he said, my argument is that stablecoin is pegged to one currency, which faces conversion costs when used across different countries, versus Bitcoin being an internet currency. Yeah, internet currency is fine until you have to pay taxes. Internet currency is fine until you have strong government regimes that don't want you to have that currency. I don't think, like, of course, consumers, at least this is how I see it, consumers are best with the least amount of government interaction. The problem is you have to price in some level of corruption and some level of power want from government, okay? And that there's no, like, government's not going away. It's getting stronger. and maybe potentially there could be some government that gets involved, and that's just potentially in one country, but across the board, that there's going to be more oversight. There's going to be all these things. And they're just not, like, the Federal Reserve is not going to let the United States dollar disappear. What I think is so good about a stable coin, and this is just a US denominated stable coin. My argument to you would be there's Euro denominated stable coins. There could be all sorts of currencies denominated to different stable coins that would allow for next to zero transfers to multiple currencies. So just because people think of US dollar stablecoin doesn't mean that's just because what has become popular right now. Okay, that doesn't mean anything in my opinion. You'll just use your own country's stablecoin. I find Bitcoin takes away from a lot of different governments' powers, and they're not going to accept it. That's just personally in my opinion. The stronger it's gotten, the more crypto has gotten slammed down on. What I like about a US dollar denominated stable coin is that it still puts the hands in the power of the United States government, Okay, they still get to print money, and that has an effect on the economy, but it allows for the cheapness, and like micropayments are able to happen. The percent takes on all of these different transactions are still able to happen at higher securities and lower need for high fees. But yeah, so I actually don't really believe that I'm not anti-Bitcoin, but I just don't see how the government of the United States lets that happen. Seems weird to me. We aren't like Canada. We'll allow BTC to live. And honestly, I've been very happy with a lot of the court's decisions on things like spot Bitcoin ETFs. But for a long time there, for like 18 months, it was looking like it wasn't happening. At every turn, Coinbase was getting destroyed on, Bitcoin lending. They were getting destroyed on a staking. They were getting hit with all sorts of things. They were doing everything in their power to slow it down. Thank God, judges actually had decided on and said, hey, you know what? There might actually be some real recourse here. But I don't know. It's a lot of countries that need to get involved to make a global currency. A lot. Yeah, I'll cover more about Square. The $1 billion buyback definitely cheered people up. But yeah, Fintech had a great day. Upstart was up 11.5%. Pagaya was up 13%. Lightspeed was up 16% and an additional 1% after hours. SoFi was up 8%. Lemonade was up 47%. Shopify up 22%. Affirm up 19.5%. Block was up 7% today and an additional 16% in after hours. It was good. It was fun. But ladies and gentlemen, hope you guys are all doing well. I'll see you at 8:30. We've got more earnings calls coming down the pipe. I cannot wait for Nubank. I just wish Nubank wasn't on November 14th. Why do you have to be so far away? I feel like they all happen all at once. I wish we would just spread this crap out. I'd have coverage all quarter long. Anyway, those are my problems, not yours. Thank you so much for watching, and bye for now.